gentlemen, good day and welcome to Q1FY26 earnings conference call of Himadri Speciality Chemical Limited, hosted by MUFG in time. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bhavya Shah from MUFG in time. Thank you and over to you, sir.
Thank you. Welcome to the Q1FY26 earnings conference call. Today on the call we have with us Mr. Anurag Chaudhary, CMD and CEO, Mr. Somesh, EVP, Tire and Strategy, and Mr. Kamlesh Agarwal, CFO. This conference call may contain forward-looking statements about the company which are based on beliefs, opinion and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Our detailed safe harbor statement is given on page 2 of investor presentation of the company, which has been uploaded on the stock exchange and company website. With this, I now hand over the call to Mr. Anurag Chaudhary. Over to you, sir.
Thank you, Bhavya. Good afternoon, ladies and gentlemen. On behalf of Himadri Speciality Chemical Limited, I am pleased to welcome you all to our Q1 FY26 earnings call. We deeply value your continued support and engagement. We are delighted to share that Q1 marks a strong and focused start to the new financial year. It reflects the strategic direction we have been undertaken, one rooted in capacity expansion, technology-driven product development, and deeper global integration. These initiatives are aligned with our commitment to build a future-ready, diversified, and sustainable organization. This quarter was particularly significant as it reflects the core spirit of Himadri Reloaded, the next chapter. This phrase is more than just a theme. It captures the mindset driving us forward, reimagining what's possible through innovation, resilience, and sharp execution. From a financial standpoint, we are pleased to report our highest ever EBITDA and PAT, underscoring the strength and stability of our operations. EBITDA stood at 234 crores, while PAT came at 183 crores on a standalone basis. This performance was led by increase in share of high value-added products, better operational efficiencies, improvement in yield, and strong waste heat recovery systems. While the revenue growth was marginally impacted due to correction in raw material prices, our profitability trajectory remains on a firm, sustainable upward path. At the core of our business lies a deep commitment to developing innovative solutions that drive customer satisfaction, powered by our robust in-house research and development. Much like our highly integrated manufacturing capabilities, this enables us to effectively cater to the evolving demand of sundry sectors. We deliver high-performance products across diverse segments, including lithium-ion batteries, paints, plastics, tires, technical rubber goods, aluminium, graphite electrodes, agrochem, defense, and construction chemicals. Our sharp focus on quality, process control, and innovation continues to keep us ahead in a rapidly evolving global landscape. Post the successful acquisition of Birla Tyres Limited by Himadri Speciality Chemical Limited, strategic partner, along with resolution applicant Dalmia Bharat Refractories Limited, in October 2023, significant efforts have been directed towards modernizing and revamping the Birla Tyre plant at Balasore. During the quarter, tangible steps have been continued to be taken to advance the transformation agenda, with operations now having commenced at Birla Tyres, making a pivotal milestone in the journey to establish a high-performance, future-ready specialty tire brand. A refreshed brand identity was introduced featuring a modernized logo and a redesigned corporate website to reflect this strategic shift. We are pleased to inform there has been huge brand recall we have seen from the market. The focus is on building a comprehensive product portfolio of specialty tires catering to off-the-highway tires, commercial vehicles, agriculture, industrial and electric vehicles. Progress on commissioning the passenger car radial tire remains on track. This unit is designed to meet the specific requirements of EV and SUV segments, supporting expansion in both domestic and export markets. Additionally, a targeted multi-platform marketing campaign is being developed to enhance brand recall and engage effectively with contemporary consumers. In parallel, we made significant progress in building our clean tech and new energy material vertical, a pillar that will define Himadri's next growth wave. We entered into an exclusive technology licensing agreement with Sicona, an Australian innovator in silicon carbon and anode material. Their SiCX technology, proven to enhance energy density by 20% and charging speed by 40%, gives a strong edge in the evolving EV and storage market. With this agreement, we have taken a strong step towards localizing this technology and bringing it to scale in India. In addition to that, we invested in International Battery Company, IBC, a US headquartered technology developer and manufacturer of chemistry-agnostic prismatic lithium-ion cells, acquiring 16.24 equity stake. IBC has an established manufacturing facility in South Korea which began operation in 2023 and is coming up with a gigafactory in Bangalore through its joint venture with Mahanagar Gas Limited subsidiary. This gigafactory is expected to be operational by Q4FY26. Our advanced materials jointly tested with IBC have demonstrated outstanding results, fulfilling their stringent requirements for high-performance battery manufacturing. This is a significant milestone for the company as it marks the start of commercial deployment of Himadri LFP cathode active and anode material, with IBC presently developing its LFP-based Prabal 2000 using Himadri battery materials. This partnership also opens door to IBC's global customer base across US, India and East Asia. While these initiatives shape our future, we continue to strengthen our core. With an established high-temperature liquid coal tar pitch terminal already operational at Haldia, we have now commissioned a new terminal at Mangalore. This expansion significantly enhances our logistic capabilities and export competitiveness. In parallel, we are setting up a unique facility, the first of its kind in India, to extract high-value added chemicals like anthraquinone and carbazole from our existing coal tar distillates, which is expected to be commissioned in Q2FY27. This will help us to reduce India's dependence on import and unlock greater value from our integrated operations. We are also entering the consumer segment with the launch of Durofresh, our high-purity naphthalene balls retail brand. Backed by 99.5% purity and stain-free performance, Durofresh sets new benchmarks in vapor strength and long-lasting freshness, reinforcing our technical leadership in the refined naphthalene market. Meanwhile, our brownfield expansion of 70,000 metric tons per annum in specialty carbon black is progressing well and is on track to be commissioned by Q3FY26. With this, our specialty carbon black capacity will more than double to 130,000 metric tons, making it the single largest specialty carbon black site in the world and places us amongst the top 5 specialty carbon black producers globally. As part of Himadri's vision to become a global frontrunner in production of lithium iron phosphate cathode active material powering 100 gigawatt of lithium ion battery capacity, we are making steady progress on phase 1 of this journey. This phase involves setting up world's first commercial LFP manufacturing plant outside of China with a planned capacity of 40,000 metric ton per annum. The project is progressing as scheduled and is expected to be operational by Q3 FY27, with full-scale operations commencing in FY28. This facility marks a significant milestone not only for Himadri but also as a step towards. As we look forward, we are entering a new phase, one that is bold, transformative, and purpose-driven. With a robust pipeline of technologies, disciplined execution, and clear roadmap, we are confident of delivering sustainable and profitable growth. The next 3 years will be defining years for develop new age materials, deepen our global presence, and capture opportunities across energy transition, specialty chemicals, and downstream value chain. We thank you for your continued trust and support as we script this new chapter of growth, Himadri Reloaded. With that, I would like to hand over the proceedings to our CFO, Mr. Kamlesh Agarwal, to walk you through the financial performance in detail.
Thank you, Anuragji. Good evening, everyone, and thank you for joining us today. Hope everyone has had a chance to review our financial results and the latest investor presentation, which has been made available on both the stock exchanges and our company's website. We have commenced the financial year with a clear focus on execution, operational excellence, and disciplined financial prudence. Let me begin with the key financial highlights of the quarter. Sales volume have increased to 1,40,090 metric ton as compared to 1,39,175 metric ton a year ago. Consolidated revenue for the quarter stood at rupees 1,118 crore as compared to 1,200 crore a year ago. The revenue was marginally impacted majorly because of correction in raw material prices, which led to the reduction in the finished good prices. Our EBITDA stood at rupees 235 crore as compared to 188 crore a year ago with a growth rate of 25%. Our PAT has significantly increased to rupees 179 crore from rupees 123 crore a year ago with a growth rate of 46%. On a standalone basis, the revenue for the quarter stood at rupees 1100 crore as compared to 1200 crores a year ago. Our EBITDA stood with 234 crores as compared to 188 crores a year ago with a growth rate of 25%. Our PAT has significantly increased to rupees 183 crore from rupees 123 crores a year ago with a growth rate of 48%. Our company has net debt was rupees 107 crore for Q1 FY26, while ROC was 32%, excluding investment and capital work in progress as of 30th June 2025. We remain committed to delivering strong value through our strategic priorities and operational rigor. That's all from our side. We will now open the lines for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are requested to use handsets while asking a question. The first question is from the line of Sandesh Jain from ICICI Securities. Please go ahead.
Thank you. Thanks for this opportunity. I have a few questions. First, on the graphite, today there was a news article telling that US has put some 93.5% ADD or has proposed to put a 93.5% ADD on Chinese graphite, and we intend to be in the anode active material. How do we see this as an opportunity? Because we have generally spoken about cathode, not so much on the anode. Are we looking to harness this opportunity as well?
Yes. Good afternoon, Sanjay. So, the effective duty will be 165%. Already there is duty on Chinese anode. With this additional duty coming in, so this is a great opportunity for us to supply material to US. So it's open up. Yeah. What?
What exactly are we looking to export? Because in anode we are not spoken much about, and we are not announced any capex. Can you give more color on the anode side of the business?
So anode, we have been doing a lot of research and development, and our work is progressing very strongly. And at right point of time, we will announce the capex. Once the engineering and now we are working on the engineering part of it. Once the engineering is completed, we'll announce the capex and time frame with capital investment.
Got it. So right now we have not announced anything on anode. Right now we have not announced anything on anode.
No, nothing. But we are making a lot of groundwork for that in terms of customers' approvals, sending samples across geographies to OEMs. All those things are already moving very fast.
Got it. My second question is on the volume growth. Last year we had a very healthy volume growth, upwards of 15-16%. Now that volume growth looks to be tapering down, how are we planning to see that we sustain the volume growth at least 8-10%?
Definitely, we are looking forward from Q4 onwards. You will see a strong volume growth once the capacity, like carbon black capacity, will come in place in Q3. So from Q4, you will see that capacity coming up. In addition to that, we are debottling some coal tar pitch capacity also. That will also come into play. So from Q3, Q4, you will see volume growth also coming up.
How much debottlenecking in coal tar distillation are we looking at right now?
So currently, we are at 500,000 metric ton. We are looking at debottling another 100,000 metric ton.
So from 5, we will go to 600,000 metric ton, right?
Right.
And this could be commissioned by?
By Q3.
By Q3.
This is not commission. This is just debottling. So there is no access commissioning at a one go. It means you will see quarter-on-quarter improvement in the numbers from next quarter onwards.
And this volume constraint, what we are seeing is purely because of the capacity utilization, and not that we have seen any softening in demand.
No. We are like carbon black. We are running at 99%.
Hello?
Yeah, we are at very high capacity utilization. So this is because of the capacity constraint, not because of demand issues. So basically, if you look at the turnover also, the top line compared to the previous corresponding quarter last year came down by 100 crores, whereas the volumes are more or less same. The reason is the raw material price has considerably corrected, and because of that, the finished product price has also come down. It's the effect of that.
No, that we appreciate. That I got when you initially made that remark. But purely on the carbon black, we have seen Oren Carbon Black announcing a plant shutdown in Europe region. Is more of a speciality, or it's more of a rubber carbon black? And the question is that, do we see that as an opportunity as well for Himadri?
Yeah, definitely. Since we are strong in Europe, we definitely look forward to that as a great opportunity.
So how much of a carbon black today is sold in Europe?
So you can say currently we are exporting around 20% of our carbon black, 15 to 18% of our carbon black to European market.
Okay, so the export contribution of Europe in carbon black is almost 15 to 20%.
Yeah.
Got it. And the last one is on the gross profit per kg. That looks like improving secularly. Now we are 15% YOY growth or 16% YOY growth. What is this driving a consistent, steady increase in the gross profit per kg? That's number one. Number two, sir, when you say that you have seen favorable product mix, when you say favorable product mix, can you elaborate which product has grown faster, where the margins are higher, and which product we are curtailing where margins are lower? Some mix on the some color on the mix would help us appreciate this improvement in the gross profit and EBITDA per kg.
Sure. So, the product mix has changed. Like we were doing more percentage of crude naphthalene. Now the percentage of refined naphthalene has significantly improved. Second, in terms of specialty carbon black, we are moving up in the ladder of specialty carbon black. With that, the margin per metric ton margin keeps on improving. And regarding the gross margin, we have been able to improve on the gross margin basically because of operational efficiencies, improvement in yield, and reduction in wastage. So we have also installed the wastage recovery system, which helps us to recover all the high temperature gases can be used in the heating back in the process. So all this together has been helping us to improve on our gross margin, and plus high value added products like I told refined naphthalene, high quality means very high grade of refined naphthalene that has higher value addition, high grades of specialty carbon black, specialized pitches going into defense. All these things are helping us to improve on the margins, and these are sustainable.
And then how much more can we grow from here on the EBITDA per kg? We are already at 17 rupees EBITDA per kg. How do you see this number going in, say, FY26 and FY27?
We are confident of this number being maintained, and gradually you will see upward movement in these numbers. I don't want to give specific numbers, but yes, for sure you will see upward movements.
Very clear, sir. Some questions from the tire business now that we have started branding and all. Have you started the production and sales as well, or right now we are focusing on the softer side of the market?
No. We never did any softer side. Nothing went free. From the day one, we have been selling with consideration. So, for June quarter, we did sales of 18 crores.
Okay.
5 crores from tire business, and it just started on the 29th of May. So now in the current quarter, you will see a good slight ramp up, and quarter on quarter you will see improvement. But one thing is there, when we are going to the market, we have already appointed 20 distributors, and below these distributors there are many dealers. Like every distributor has ranging from 8 to 20 dealers. So we are getting very strong brand recall from the market. So people are highly appreciating our brands like BT 112, then Ultra Mileage, Kala Patthar. All these are very well appreciated in the market. San Plus, all these are very well appreciated in the market. And when we are going to the customers, when they are saying Birla Tyre is back, they are getting very, very good response.
So we have appointed the distributor dealers, and this is what, mainly into the East region?
No. We have appointed in 11 states, and every quarter this will be increasing. With our increase in production, like every quarter you will see increase in production and higher capacity utilization. So with that you will see more and more states being.
Got it. Just one last bookkeeping question. We have this first time purchase of stock of 57 million or 5.7 crore. What is this?
What?
Purchase of stock in our cost of goods sold. There is 5.7 crores of purchase of stock which we have sold.
So actually, this we have as a 100% subsidiary of Himadri Himadri Clean. So that is buying from DBRL the tire they are making and selling. So it's the marketing arm of Himadri. That is what the stock market is.
Okay. But in console level that should get knocked off, right? But this I'm seeing in consolidated
console it will come because we are buying from the outside entity. We are buying from DBRL. That's why it is coming in the console as a separate entity, separate line item.
When is this entity expected to come within the Himadri? Because I thought the manufacturing...
There is no intention as such now, as of date, of its coming into Himadri.
Okay, I will take this offline for more clarity, but this is very clear. Thank you very much, sir, and best of luck for the coming quarters.
Thank you.
Thank you, sir. The next question is from the line of Rehan Syed from Trinetra Asset Managers. Please go ahead.
Good afternoon, team, and thank you for giving me the opportunity. So, sir, I have a couple of questions regarding the business. So, sir, first of all, can you please elaborate on how innovative product? Am I audible?
No, you're not audible. Please, your voice is cracking.
Okay, sir. Now am I audible now?
Yes.
Sorry to interrupt you, sir. So can you please use your handset?
Ma'am, I am already on handset only.
Okay, sir.
Yeah. Now it's clear now?
Yeah, it's better. It's
Yeah. Sir, could you please elaborate on how Himadri's product integration and revenue synergy panned out in Q1 FY26 and any visible contribution or pipeline build-up from this acquisition for going forward? If you don't.
You please speak clearly. Your voice is not clear at all.
Now I am clear, sir.
Please tell me.
Yeah. Sir, can you elaborate on how Himadri's product integration and revenue synergy panned out in Q1 and any visible contribution or pipeline build-up from this acquisition for going forward?
So, Himadri has developed nanotechnology for battery material, and this is in development stage. So, looking forward, once it materializes and the technology matures, but then we will have very big difference in terms of what we will be able to produce in terms of raw material component for lithium-ion batteries. Currently, they are selling some product in terms of animals and agriculture products, out of which the top line for this quarter was 3 crores and 1 crore of tax.
Okay. Okay, sir. So my next question is towards your B2C brand, DuoFresh. How it's performing Q1 in terms of distribution, revenue, or contribution, or any early customer feedback you get already? Or for going forward, are you targeting this segment aggressively in FY26 and 27?
You please speak clearly. Which company you are asking for?
Sir, I am from Trinetra Asset Managers. Sir, now I am clear?
No.
Sir, I'm talking about B2C brand, your DuoFresh.
Okay. So, DuoFresh, we are the largest manufacturers of naphthalene in India with 68% market share. So, historically, we have been selling crude naphthalene, and now we are selling refined naphthalene in a big way. So, the next step is mothball. So, mothball is a significant value addition to the refined naphthalene. So, this is the first time Himadri is going to B2C segment. So, we are launching this brand, DuoFresh, and looking forward, we look for a very strong demand from the entire country and from export market.
Oh, okay. Okay, sir. Also, last one question, sir. Any future guidance regarding EBITDA margin or revenue growth you are targeting for 2 to 3 years down the line?
So we, as we have already told in our last con call also, we expect our net profit to double from FY24 to FY27.
And for EBITDA margin, sir?
EBITDA, we don't look at EBITDA margin, we look at more EBITDA per metric ton. Because raw material prices and finished product prices fluctuating, the margins can always fluctuate. Like it is 21%, last quarter was 17%. So this can fluctuate.
Yeah, definitely.
EBITDA per metric ton margin is around 16,500 now.
Yeah. Sure, sir. Thank you for answer and thank you for future order.
Thank you, sir. The next question is from the line of Brudhi Shah from SAS Capital. Please go ahead.
Hello. Thank you for this opportunity. I have a
Sorry to
question.
interrupt you, ma'am. Can you please use your handset?
Hello. And am I audible now?
Please, you are audible. Please.
Yeah. So my first question is that how are you positioned against global competitors in the high margin specialty carbon and battery material segment?
See, Himadri has an inherent strength that for specialty carbon black, we have our own raw material. So when we do coal tar distillation, we produce oil which is very clean oil, and very consistent in terms of quality. Our sulfur content is 0.002%. Plus, there is hardly any impurities in the oil. This gives Himadri a inherent edge in terms of specialty carbon black compared to any of the peers globally. And regarding lithium-ion battery component materials, so we have developed technology for LFP in-house, and the product is pilot scale product we have supplied to many customers and have got very good response from them. And one clear evidence is from IBC. We have supplied samples to IBC for LFP and anode. So after doing a diligence test of 1 year, despite with the quality of Himadri LFP and anode, that they themselves came forward for a collaboration.
Okay.
And Himadri being the only company outside China who is coming out with the first plan for lithium ion phosphate, is a big advantage, first movers advantage. Same in anode also. Anode, we have done a lot of groundwork. Now only thing is that at right point of time we'll announce the capacities also and capex with the timelines once the engineering and everything is completed.
Okay. My second question is, what percentage of your revenue now comes from export, and how are global carbon black and advanced material marketing behaving?
So 34% of our revenue is coming from export, and there is huge opportunity in the global market with the current geopolitical situation. India is at a much preferred stage compared to any of the country we are competing with.
Okay. Thank you.
Thank you.
Thank you, ma'am. The next question is from the line of Vikas Gupta from RG Capital. Please go ahead.
Hello, am I audible?
Yes.
Yes.
Yes. Thanks for taking my question. So my first question is, can you shed some light on the LFP-based Prabal 2000? What stage is it currently at, and what kind of demand outlook do you foresee for this product in the near to medium term?
So, IBC has already launched one prismatic cell with the branding Prabal 1000. So Prabal 1000, the chemistry is NMC. So now they are going to launch in next 1 year time Prabal 2000, which will be with LFP chemistry. And this LFP chemistry and anode material is being built around Himadri raw material. So, and the market for this is huge. The market for lithium-ion cell is very large. And LFP now being used in both the segment BSS and EV has huge market potential.
Understood, sir. So my next question is that there was a noticeable increase in the other income in the profit and loss statement this quarter. Could you please provide the clarity on the key components or sources of this increase?
So other income has increased basically because of we have taken loans, we have issued commercial papers and deposited as fixed deposit in bank. So the delta between that has helped us to improve on our other income. In addition to that, the investment what we have made, some change has happened in the fair value of that, minor changes, which have also helped to increase the other income.
Okay. All right. Understood, sir. And so my last question is that with your recent foray into the refined naphthalene ball segment under the brand Eurofresh, could you elaborate on the pricing strategy and what differentiates this product from existing offering in the market that would drive consumer preferences?
So, one thing which will really drive this is the purity of the naphthalene. We produce the highest for purity grade of naphthalene in India, and I can rather say one of the highest in the world. We are supplying already. We are the largest supplier to mothball market in US. Willet, there is a company called Willet who are the market leaders in mothball in US, and they buy more than 70% of their requirement from Himadri. Only because the reason being that our quality and our purity levels are very high. So with this and Himadri being backward integrated, being the largest player in naphthalene, so we have a natural edge compared to anyone else who is buying naphthalene and then purifying it and then selling as mothball.
Understood, sir. Thank you. That's all from my side, sir. Thank you.
Thank you, sir. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Prathamesh Diwar from Tiger Assets. Please go ahead.
Yeah, most of my questions are answered. So just one thing. I think we mentioned we are going to double our PAT by FY27. So around 1,000 to 1,100 crores of PAT we are targeting by FY27. Is it right?
No, I told we are doubling from FY24.
Okay, got it, sir.
Thank you.
Got it.
Thank you, sir. The next question is from the line of Vivek Gupta from Star Investment. Please go ahead.
Hello, hi. Am I audible?
Yes, please.
So, in your presentation, you have indicated that additional capex is planned for the Birla Tyre segment beyond the 300 crore already outlined. Could you please share an estimate for the incremental capex involved and the expected revenue contribution from this additional investment?
See, we are doing it in phases. So it will be done over a period of next 3 years. So in total, we have yet to, come out with a total number. But ballpark figure as of now, during the current year, will be around 250 to 300 crore additional capex compared to what we have invested.
Okay.
And this will continue for next 2 years, since we will be ramping up the capacity and modernizing, and idea is to convert the existing bias capacity into OHT and OTR and to modernize and restart PCR. So I think for next year, 3 years, this capital deployment will continue in this manner only.
Okay. So regarding the upcoming LFP cathode plant, which is scheduled to commence operation in third quarter of FY27, will the initial production primarily cater to domestic demand or exports? Or also, could you provide a ballpark pricing expectation for the LFP product?
See, LFP product pricing keeps on varying depending on the raw material prices, where the lithium prices goes. But on a ballpark figure, it will be between 6 to 7 lakh rupees per ton as of what it looks today. And we will be basically targeting export market with some domestic, because not much capacities are coming up in India by Q3 FY27. So the capacities which are coming up definitely will supply to them. But in addition to that, whatever capacity will be there will be supplying to the global market, particularly Europe and US.
Okay, thank you.
Thank you, sir. The next question is from the line of Anubhav Sahu from MC Pro Research. Please go ahead.
Hello. Yeah, thanks for this. My question is regarding competitive landscape within the domestic end market for the carbon black? I mean, we have been doing quite good on the export side, but how is it in the domestic side, given that there's a bit of a muted auto end market scenario? Secondly, there has been a flow of dumping of carbon black from Russia. Any comments on that, please?
See, the advantage Himadri has, we don't have huge volumes to sell. Like, we have only 180,000 tons and we go to 250,000 tons. So with a limited volume, we choose our customers very prudently, and we only look at customers who value quality and who value, the delivery quality, consistency, hardly any static process control system is very strong. All those parameters who value, we focus at those customers. Over the years, because of this focus, we have developed a very niche basket of customers. And these basket of customers are not import agnostic. Means they don't depend on import. They don't look on imports. So that gives us a big advantage. Means you will be even being a carbon black player within the group, we don't supply to Birla Tyres even.
Oh yeah, yes, that I got it from last call. In fact, Birla Tyres feedstock actually comes from other place, and it was probably because of the cost advantage you mentioned. Secondly, how do you see the volume growth for fiscal 26, given that we would have a bit of a constraint on the carbon black till Q3? Would it be safe to assume that the last part of the volume growth for this fiscal would actually come from Birla Tyres and this initiative on the naphthalene business?
Yes, last part of volume growth will come from three segments. One is Birla Tyre. Second is specialty carbon black from Q4. Q3 it will commence production. Q4 you will see the clear-cut volume growth. And existing coal tar pitch business where we are going to debottle, and that additional capacity will come also from Q3, Q4.
Got it. And sir, last bit, would it be possible for you to share what revenue contribution or volume contribution we get it from naphthalene business?
We don't give product-wise contribution or cost. It's everything comes in the carbon chemicals. So we don't do product-wise accounting.
Understood. Thanks for this. Thanks.
Thank you, sir. The next question is from the line of Bharat Shah from ASK Investment Managers Limited. Please go ahead.
Yeah. Hi, Anurag.
Good afternoon.
Good afternoon, Anurag. First of all, hearty congratulations. Very significant journey has been evolved over a period of time from a kind of a commodity product portfolio to evolved and specialty portfolio. It has been many years of hard work. So many congratulations to Himadri, yourself and the entire team. Two questions. One, while many of the acquisitions fitting well with your strategy of specialty and moving up on the value chain, so that is quite an understandable one. But I was wondering whether Birla Tyre acquisition, is it going to be more an advantage or it is going to be a distraction? Because at the end of the day, you may use a lot of your material in tires, but tire is a very different business than the specialty chemicals business that you are in.
Thank you so much for. I'll just, one thing, for us, Birla Tyre for Himadri is not a customer. Himadri is not supplying any carbon black till date to Birla Tyres. So, because Himadri is able to sell its carbon black for a niche application at a much higher price than at what Birla tire can get from outside. Birla Tyres is a standalone business, and why we have 15 years back, I ventured into carbon black. That time I was knowing nothing of carbon black. I was supplying oil to carbon black. And then big question was that whether I will be able to get the technology right, whether I will be able to make it the product. And the day we started, we are bang on the product, the first day itself. And now we are far ahead in terms of specialty carbon black, which many of the companies in the world have not been able to do after so many years. Same thing with Birla Tyres. We have been supplying carbon black to the tire companies for the last 15 years now. So we know the industry in and out very well. We know the people who are doing, who are great in this business. So it's much easier for me to make my team. And I'm telling you, the kind of team within a short span of time we have been able to build is unreal. And when we started Birla Tyre, our rejection rate is minimum with old machinery even. We are ramping up very fast, and the entire business from bias tires will be converted into OTR and OHT tires, and we will again be launching passenger car radial and EV. And the ROC that Himadri will be delivering in this business will be unimaginable. Basically, our investment has been only 300 crores for an asset worth 3,400 crores. So we have got at less than 10% asset. So after the capex we are proposing, the ROC will be significantly higher than any of the peers. And with our relationship in the industry for last 15 years, and the way we have been able to build up the team, and I still continue to build up, I'm 100% confident of amazing results from Birla Tyres.
No, which I deeply appreciate. My only limited point was, is a specialty chemicals company starting from supplying to carbon black industry to becoming a full-fledged carbon black player to becoming a specialty carbon black player, and now many other offshoots from that into a specialty chemical journey. But all of that is a B2B kind of a business. Tires is a B2C kind of an activity, even if it is in specialty area like off the road and commercial vehicle and agri and other applications that you narrated. It still remains kind of a B2C business, sales organization, overall organizational mindset. All that needs to be different for the tire business than what a specialty chemical operations is. So it was just from that point of view whether this is a risk of causing distraction in the strategic footprint of the company or strategic management bandwidth of the firm.
One thing, what has happened, what really we did over the last few years, what we did from being a chemical company, now I started focusing on building management bandwidth. So that is what I did. I started building last 6-7 years. I was only focusing on building management bandwidth and strengthening each vertical with a business head. So today, if you look at me, I am hardly engaged in any operations. So Birla Tyres is like that also. It's a separate vertical with business head looking into it with complete independence, but strong reporting systems and processes clearly defined. So with the increased bandwidth that I am able to develop over the last few years, that is the reason today, if you look at our annual report also, we have given the theme Himadri Reloaded, the next chapter. Why? Because we have done the groundwork for the future, and now we are ready to take on many assignments at the same time and with 100% confidence to deliver value to our stakeholders.
Okay. Really appreciate. That does require material change in the mindset to.
And sir, one more thing. I just wanted to tell. See, I don't want to remain only a product-specific company for life. That I have been making a quota distillate product, so I end up doing that only. With my years of experience, we have expertise in processes. Over the year, 35 years, we have expertise in doing acumenship or doing business. So now, to increase our foothold, we cannot get a better launching pad than Birla Tyres. If today or tomorrow I have to go into B2C, from what I want for future of the company, I don't want to be only B2B business. I want to look at several B2C businesses also. For that, if I have to restart and make a brand, it will take 20 years minimum to build up a brand. And by God's grace, we have got Birla Tyre brand with 40 years of legacy and what a recall. So that is the game changer. Today with Birla Tyre brand with you, the B2C business looks like a cakewalk.
Sure. And I'm sure one last point on this particular thing before I move to the second part. I'm sure you would have analyzed the reasons for a 40-year-old well-known brand to fall into the kind of state of disrepair that it fell into, which is why you acquired a business like that for 1/10 of the underlying assets value. So what in your opinion went wrong, and what are lessons which have been built into the acquisition footprint in order to ensure that Himadri doesn't suffer so many consequences?
So we did thorough study before taking over the unit. I got in touch personally with most of the CEOs, ex-CEOs of Birla Tyres, and I did a deep dive. I talked to the lowest level people who are working there, and mid-management and top management. And then we did a thorough analysis of what really went wrong. Because of, some constraints, I'm not able to explain that online at a conference call, what really went wrong, because it's not right on my part to tell something negative about some other management or something, which I don't feel like doing.
No.
But we did a deep dive and clearly articulated our strategy, and we made we made a 10 guiding principles for this business, learning from the failure of Birla Tyre, we call it. And those are our founding pillars for success. This is going to be our founding pillars for success. We have clearly identified what was the loophole, what went wrong, and everything. I'm giving you a very small example. Like when we took over this unit, 13 unions were there. Now we have no union. I don't want to go into details, but from that you can understand our capability metrics.
Sure. Now all the very best on a very major step, not in terms of the capex amount involved, but in terms of the direction of the firm and the business. Coming to the second part, if you look at the 5-year period, that is financial year 2021 up to last year 24-25, we have made a remarkable progress. Our volumes have gone up about 1.5 times. Our top line has gone up about 3 times. Our operating profits have gone up 6 times, and profit after tax has gone up about 12 times. You also narrated that from 24 to 27, the bottom line is likely to double. So what is the picture to be expected from after 27 to say further 3-year period, or from 25 to the next 5-year period, 30 years,